Thinking about buying or selling a home but unsure what the market's doing this spring? Let's break down what's really happening in Wilsonville and the surrounding areas and what it means for your next move. If this is your first time here, I'm Joe Skipper. I'm a residential real estate expert based in Wilsonville, Oregon, but I serve the Portland Metro and the Willamette Valley regions as well. So whether you're looking to make a move or you just like keeping tabs on the market, I've got you covered here. So be sure to hit that subscribe button, give this video a like so that you never miss an update. Now, let's take a look at what the numbers are telling us and how they could shape the rest of 2025. Now, the sales to list price ratio ticked up slightly to 99.07%. All in all, demand is still strong and Wilsonville remains a desirable place to buy and to sell a home. Now, that 9.5% increase in price stands out, especially considering where we're still working through higher interest rates. Home values are holding firm, and if you're in a position to buy, real estate is a smart long-term investment. Now, on the flip side of things, a 26% drop in active inventory means we're still in a low supply environment. Sellers have a real opportunity to stand out here, especially if they list ahead of the usual spring influx. Now, I'm already seeing more homes getting prepped for market and buyer traffic is picking up fast. A lot of buyers are done waiting for rates to drop significantly. They're adjusting expectations and they're jumping right back into the market. So if you're thinking about selling, listing sooner than later may help you beat the crowd. Now, with the rent prices still often undercutting mortgage payments, it does make sense that some buyers are just a little bit hesitant. But for those who are financially ready, it's a great time to enter the market. There's less competition, more negotiating power, and that window may be closing soon as spring is starting to heat up. And I'm also trying something new in this month's video. I'm gonna add some quick stats for surrounding cities so you can see how Wilsonville stacks up compared to them. So let's start with Lake Oswego. Lake Oswego's median home price is about $800,000 as of late winter, down roughly 15% year over year. Now, this market leans towards the luxury side and prices have cooled since 2024. In fact, price per square foot is lower now than we saw in 2022 or 2023. Now, does this sound like a crash? It's not. It's just a gentle correction at the high end, in my opinion. Homes in Lake Oswego are spending about 42 days on market, down from 54 days last year. And for a higher end market, that's a really quick turnaround. As of late February, there were 189 homes for sale. That's a healthy selection and more than we've seen in the recent years there. This growing inventory shows a softening demand at the top, and many sellers are now adjusting their pricing strategies to stay competitive with it. Moving slightly north and slightly west, let's talk about Tigard. Tigard's median sales price is sitting at $658,000, which is up 4.1% from last year. It's a steady mid-tier market that's seeing healthy price appreciation, which is bucking the cooling trend happening in some of the higher end areas like Lake Oswego. Interestingly, homes in Tigard are taking a little bit longer to sell than they did a year ago. Median days on market is around 80, that's up from 67 last spring. Now, this might be due to a broader mix of homes there, including newer builds or higher price listings that take more time to move. Inventory is moderate for this area with 157 active listings as of late February. It's not overwhelming, but buyers have more options now than they did a year ago. Tigard is seeing a steady flow of new listings, which is keeping the market active without it overheating. Overall, the competition is moderate. The most appealing homes are still selling quickly, sometimes above asking, while others might still need a small price cut to get those offers in. By the way, if you want me to include your city in future videos, drop it in the comments below. I would love to feature the areas that you're curious about. And before I bring Paul Robinson in for the mortgage side of things, I want to touch a little on mortgage rates myself. Right now, rates are hovering in the mid 6% range for a 30-year fixed loan. Now, that's higher than we'd like, but slightly better than 2024. Because of that, many buyers are taking a more cautious approach. They're adjusting their budgets or looking in areas like Tigard or Beaverton where they can get more bang for their buck compared to Lake Oswego or Wilsonville. Sellers are also stepping up. They're offering rate buydowns or other incentives to make deals work. Creative financing is on the rise again. And that's why I've asked my friend and trusted lender Paul Robinson on to stop by and talk about it. Paul's a regular on this channel and he always brings good insights. One area Paul's been helping buyers with is non-qualified mortgages or non-QM loans. These are great for self-employed buyers or folks with unique income situations who don't really fit the traditional lender checklist. Non-qualified mortgages often come with slightly higher rates or down payment requirements, but they're opening up homeownership opportunities for people who otherwise just would be left out. So as we head further into the spring, if rates stay where they are, expect more buyers to explore options like adjustable rate mortgages, buy downs, or non-qualified mortgages, loans to make their purchase work. So let's bring on Paul to dive a little deeper into those non-qualified mortgages and what it all means. So Paul, what's going on in that world?
Hey, thanks, Joe. This is Paul Robinson, owner of Greater Oregon Mortgage Company. My NMLS number is 235238. Wanted to talk about non-qualified mortgages and specifically bank statement loans. I know I have brought those up before, but I continue to see the benefit in the mortgage space with these for both purchase loans and refinance loans. And specifically, these are for self-employed borrowers. And traditionally, I get my loans from folks like Joe, and then also from banks that I have relationships with, where they maybe don't have products, and so they send them to me. And so I get a call and someone says, hey, I'm self-employed. First step is we always look and see if they qualify for qualified mortgages. Qualified mortgages are Fannie Mae, Freddie Mac, and the government programs, FHA, USDA, VA. Those are qualified. So if someone sends me their taxes and they make enough money and they qualify there, that's where we go. But in a lot of cases, self-employed borrowers will, have enough write-offs where they don't have a high enough taxable income. Basically, how much money do you show the IRS? If that's too low, the qualified mortgages say, sorry, we can't help you. So then someone's stuck. If that's all the products that they can use, then they have to wait. They're not going to buy the house they want, or they're not going to refinance a home, or maybe a refinance could make sense. So that's where we look over at the non-qualified mortgages. And so they allow you to use an alternate source of income. So in this case, bank statements. So if someone is self-employed, and they can be a sole proprietor or someone that owns a company with many employees, it's just as long as you're self-employed and you have a good revenue, you have good revenues for your company, then the non-qualified mortgages using banking statements can be a great way of purchasing a home or refinancing a home. The things that you basically have to be self-employed. You have to be self-employed for at least 2 years. And then you give us your bank statements, 24 or 12 to 24, whichever you prefer. We run those by the underwriter. They tell us what the best income is. And then we use that income and go, okay, here's the income we can use. Can we qualify to buy the house you want? Or can we qualify now to refinance your property? And, the benefit has to be there, of course, but it allows you to do those things. The other piece, too, that's important on these is that I typically use a 30-year fixed product because I like the stability of a fixed. Now, if there are adjustable products, and if there was a big enough difference in rate, then we would look at those as well. There just hasn't been. So the 30-year fixed has just been a very well-priced product. And so that's why I personally have recommended my clients 30-year fixed. The other is they don't have prepayment penalties. And so what that means on those two things is, one, 30-year fixed, the client knows what their payment's going to be. Oh yeah, we can afford that, we're good. Okay, we know it's not going to change. At least principal and interest. Of course, insurance, taxes, those will change. But the other big piece on the prepayment penalty is if you have the ability to refinance because there's no prepayment penalty. So maybe the next year or two, you see your income go up where it's like, gosh, my taxable income's high enough. I can refinance this to a qualified mortgage. Or maybe the market has come down and the rates on the non-qualifieds are low enough where we can refinance the non-qualified into a lower rate non-qualified. So not having that prepayment penalty is helpful as well. Now I'm going to switch the page on this because there are some of the investors, lenders that offer the non-qualified loans, and they allow us to add a prepayment penalty if the borrower wants to. And the reason a borrower would want to is, let's say someone just adds a 1-year prepayment penalty. That might lower their interest rate by 0.5% or 0.75. And on a larger loan amount, that can make a big difference. And if someone's next year of taxes is going to take at least 12 months, and maybe they're the type of company that also does extensions, so gosh, it might be 1.5 years before the next taxes, come out, then a 1-year prepayment penalty might be an awfully good tool to add, to sharpen the rate a little bit. I just wanted to bring this up again because there's such a beneficial product, and they are a way of that when the qualified mortgages say, no, you can't be done right now, it's another alternate source of funding a purchase or a refinance that can make a lot of sense for a self-employed borrower. All right, have any other questions about this or anything else, please feel free to reach out to me at paul@GOMC Loans. All right, thanks.
Thanks, Paul. Your perspective is always appreciated, and you're super helpful for helping buyers navigate today's lending world. So what's the bottom line for the market this month? Wilsonville is stepping into spring on really solid ground. Home values are up, homes are selling faster, and activity is on the rise for sure. For buyers, there's more inventory and flexibility than we've seen in a while. For sellers, the market is still strong, especially if you price it right and get ahead of the seasonal wave, which is coming very soon. Nearby cities are showing a mix of trends. Lake Oswego is cooler and more negotiable on pricing. Tigard continues to grow steadily with moderate demand and decent options there. But all signs are pointing to a spring market that's active but not chaotic, and that's a good thing for everyone. Now, if you're thinking of buying or selling or just getting a better handle on your local market, let's talk. I'm here to help you make that smartest move possible when you decide to do it. So that's your March 2025 market report for Wilsonville and the surrounding areas. Be sure to like this video, subscribe to the channel, and share it with anyone that might find it useful. And if you have questions, drop them in the comments below or reach out to me directly. I'd love to help you. See ya.